Good afternoon, ladies and gentlemen. This is Aditya Mulani from the HT Media Group. I would like to welcome you all to our third quarter financial year 2022-23 earnings webinar. As a reminder, all participants will be in listen-only mode. After we are through with the presentation, there will be an opportunity for you to ask questions. I now hand over to Ms. Anna Abraham, Head Investor Relations. Thank you, and over to you, Anna.
Thank you, Aditya. Good afternoon, everyone. I welcome you all to the earnings webinar to discuss the financial results of the third quarter of financial year 22-23 of HT Media Group. On the panel today from our side, we have Mr. Piyush Gupta, Group CFO, Mr. Anup Sharma, CFO of Hindustan Media Ventures Limited, Mr. Parvez Bajan, Group Controller, and members of the Investor Relations team. On the screen now is the earnings presentation. Kindly note that our remarks will track with the presentation on this Zoom webinar. This presentation, along with the financial statements, is available on the stock exchanges and the investor relations section of our websites. The slide 2 captures the disclaimer regarding forward-looking statements, which is on your screens right now. Kindly take note of the same. As per practice, we do not provide specific revenue or earnings guidance. Moving on to slide 3. This gives our chairperson's comments on the performance of the company for the quarter, and I quote, "The third quarter of the ongoing fiscal year saw the continuation of the gradual recovery of our media businesses on the back of an improved industry-wide business environment and the annual festive season. However, persistent general inflation acted as a dampener, resulting in a relatively muted festive quarter. Raw material costs remained at heightened levels during the quarter, but will likely ease off in coming quarters. Against this backdrop, we continue to improve our business performance on a quarterly basis for the print and radio verticals. Overall, the print segment saw sequential growth in both advertising and circulation revenues, but margins continue to be impacted by high newsprint prices. Radio also saw an improvement on a sequential basis backed by better traction in both the FCP as well as the non-FCP space. With inflation easing and stabilization of the overall business environment, we are hopeful of capitalizing on the growth in consumer and advertising spending in the medium term. We remain committed to delivering credible and trustworthy news and engaging entertainment to our ever-growing audience base." End of quote. Moving on to slide 4. This gives the agenda for today. We will begin the performance update with comments on our consolidated financials, which will be followed by detailed remarks on various businesses. We will open for Q&A session after the presentation concludes. With this now, I hand over the call to Mr. Piyush Gupta.
Thanks, Aditya, and thanks, Anna. We'll just track the screen here. So as you can see on slide number 6, we've got a consolidated financial summary. So for third quarter FY23, we had a total revenue of 488 crores, which is a decline of 2% versus the same period last year. EBITDA came at 28 crores, which is a decline of 74%, with PBT at -30 and PBT margin at a -6%. The key highlights are given on the right side. Total revenue is down YOY basis, primarily on account of a relative muted macro and festival. Just to expand, in the base, sitting in the base is the political revenue which came last year, consequent to elections in UP. And also there is 8 days short of the festive season because the Diwali timing altered between the second and the third quarter. Net cash as of 31st December is at 854 crores. With that, I move on. Now we go into the business unit performance. Coming into print, we see revenue tracking at 284 crores as against 323 crores, and operating revenue, including circulation revenue, came at 368 versus 396 crores, which is a decline of 7 percentage point. Sequentially, that's a growth of 7%. Operating EBITDA came in negative at 4 crores versus YOY 87 crores last year. Sequentially, it was minus 14 crores last quarter, and therefore it's an improvement of 73%. Key highlights, if you go, ad revenue decline on YOY basis, which is led by volume. I just explained that on a YOY basis earlier. Circulation revenue has improved on a YOY and sequential basis, led by increase in realization per copy, and operating EBITDA loss on account of higher newsprint prices. A little deep dive into English. Our ad revenue came in at 160 crores as against 176 crores, which is a decline of 9%. And versus the previous quarter, it's a growth of 9%. Second quarter being 147 crores. Circulation revenue at 15 crores versus 7 crores, which is a gain of 122% and sequentially a gain of 18%. And in key highlights, retail, auto, BFSI grew while real estate, FMCG and education remained muted. Circulation revenue improved on the back of better realization per copy and higher number of copies. Moving on to Hindi, we can see a 16% decline, revenue coming at 123 crores, and sequentially it's a growth of 1% where they remain flat. On circulation revenue, again it's flat at 45 crores, both sequentially and on a YOY basis. And key highlights, auto, healthcare, durable grew while retail, education, FMCG remained muted. A quick look at our radio business. Revenue grew handsomely to 42 crores from 34 crores same period last year, which is a growth of 21%, and sequential basis it's a growth of 27%. And operating EBITDA came at 7 crores, which is a growth of 50%, and operating EBITDA margin came in at 17%. A quick look at the digital, which is sitting in HT Media Group. Our revenues came in at 28 crores as against 36 crores last year, decline of 23%. And margins were negative with a negative 4 crore EBITDA. I think with this we come to the end of the presentation. I hand it back to Aditya and Anna.
Thank you, Piyush. We will now begin the Q&A session. You can click on the raise hand option, which will enable the moderator to unmute you for posing your query. Please introduce yourself before posing your query and kindly restrict to a maximum of 2 questions per participant, so that we may be able to address questions from all participants. We will wait for a few moments while the question queue assembles. The first question is from the line of Ranga Prasad. Please unmute yourself and ask your question.
Good afternoon, everyone.
Good afternoon.
At the outset, let me say that I find it very heartening to note that the price of newsprint is finally falling. Hope we can see further sharp falls in the price of newsprint in the coming quarters. Could you please throw some light on what is the average price of newsprint used for Q3 and how you see it pan out in the coming few quarters? That's my first question. You want me to continue with the second question or wait for your answer?
Yeah, why don't we answer that first and then you can go to the next question.
Q3 on a consolidated basis, the rate was about 65,000, and the next quarter we are hoping to see about 3% improvement on this.
Do you see the trend of newsprint prices coming down consistently, or is it you expect it to just
Yes, we are seeing the trend of it coming down consistently.
For a quarter or so?
Yes.
Okay. My second question is on the expenses front. As far as expenses go, I find a disturbing trend of a sharp rise in other expenses, which have increased sharply from Q3 last year and even as compared to Q2. On a standalone basis, other expenses have gone up from 100 crores last year, in Q3 last year, to 108 crores in Q2 to a present expense of 124 crores. This is in Q3. As a line item, these other expenses are equal to the combined expense of raw material and employee costs. I think it would be very helpful and will add to transparency if the other expenses are, we have a breakup of the other expenses. And do you see any chance of improvement in the coming quarters on this front?
Yeah. So on other expenses, when the detailed financials are issued, we always give a detailed breakup. But I will talk about the major variations this time. It's partially on account of advertisement and sales promotion costs. Now this is largely because we've had some big events happening this quarter vis-a-vis sequential and last year. Both in print and in the radio business, and therefore there is an increase in cost on account of that. There's also investments which are happening in the labs business, which is a new initiative that we have done. The cost of that also sits in this, and that's also accounting for about half of this cost increase.
So thanks, Anna. So Mr. Rana Prasad, I think if I just have to add my two bits,
Okay.
Clearly, one part is the investment in HT Labs that we are doing, which is giving rise to some increased spends that we are seeing here. And secondly, with the COVID restrictions opening up, on-ground events happening, there are certain events that we are conducting, which is giving rise to certain expenses which are booked in the other expenses line, which is increasing. But they have a corresponding revenue which is also sitting upstairs.
You mean we can expect the revenue to come in the coming quarters?
Most of the revenue has come in this quarter, and some revenue might be which is linked to the deliverable if it comes into the subsequent quarter. But the bigger point that I'm trying to make is, because we are comparing with the second quarter of last year, when on-ground events were not happening, we were not conducting on-ground events, and hence these costs were not coming. Now that it is coming to business as usual, on-ground events will happen, and we will be committing some expenses on that. But those are directly linked to a revenue incidence, which will be booked in our ad revenue or in our other revenues.
Okay. Now, I also find that the finance costs are increasing quarter on quarter. In fact, they've gone up from 10 crores to 17 crores.
So two reasons actually. Finance cost, one of the reasons is the Ind AS 116. So whenever, most of our rentals which are negotiated for multiple of our offices have to undergo Ind AS 116 treatment. And what typically happens is there's some part which is kept in the operating expense. And when you renew a long-term agreement, in the initial days of the agreement, a big amount is booked in the finance cost. So it's basically a Ind AS 116 arrangement. Of course, the second arrangement is, the borrowing is definitely more expensive than what it was about a year ago. But it's a minor impact of that, but also Ind AS 116 impact coming into the finance cost line.
Now, I hope with the fall in newsprint prices and rationalizing of expenses, that in the coming quarters we can come back to profitability.
Oh, for sure.
Would you see that?
Now, look, newsprint prices in a normal situation would have fallen much more sharply than they are falling right now, given this whole geopolitical situation between Russia and Ukraine. Because if you go back to the commodity cycle of 2017-18, what went up in 2 quarters came down in 2 quarters also. Right now, it's coming down a little gradually. We are very sure of the direction that the newsprint price will only soften from here on. But will the gradient be as sharp as it was when it was going up? We don't think so, because right now we are seeing it continuously come down. But in the next 2 quarters, we are very sure that it will be another 10-20% down from here on. And of course, there is some inventory that we always carry from the business, and those things are adjusted on a weighted average basis.
Okay. Thank you very much.
Thank you.
Ladies and gentlemen, a reminder to all participants that you may use the raise hand option on your screen if you wish to ask a question. Ladies and gentlemen, a reminder to all participants that you may use the raise hand option on your screen if you wish to ask a question. Thank you all. With this, we come to the end of the Q&A session. If you have any further queries, please reach out to the investor relations team. Our contact details are given in the investor presentation and are also mentioned on our website. I now hand over to Piyush for closing remarks.
Thanks, Aditya. Thank you everyone for joining our investor call. We definitely hope for a better set of results. As I said, that the commodity prices are indeed coming down, and the revenue demand pickup should hopefully see through the economy with the GDP predictions given by Reserve Bank and the World Bank, etc., north of 6%. We look forward to seeing you in a quarter's time. Thank you all so very much, and have a great day.